Good morning, friends. I'm Assistant Professor Sri Rajpur from Sarat College. Today we are going to learn about business taxation. This is subject in SYBBA, same 4. Let's go through with the basic concept of income from salary. So what is salary? Salary means payment received by an individual for services rendered under an employer-employee relationships. So it is taxable under the income from salary paid as per the Income Tax Act. So all of you know that whenever we are having employer and employee relationship, so employer provide salary to the employee and that payment received by employee is called as salary. Definition of salary income. So it includes wages, annuity, pension, gratuity, commissions, perquisites and profits in lieu of salary. So all the types of monetary benefits in form of different like wages and pension and gratuity is called as salary. Salary is taxable when due or received whenever is earlier. So this is basic concept and definition of salary. Next is components of salary. So salary divided into different parts. First part is basic salary. So it is fixed component decided by the company. And next is allowances. So house rent allowances, HRA. In short form we call it as HRA. Then dearness allowance, DA. Then travel allowance. All these types of allowances are included in allowances. Next is perquisites. So perquisites includes non-cash benefits like company car, accommodation provided by the company to the employee. Then retirement benefits, so gratuity, provident fund, pension, all these benefits received by the employer after the retirement, this is also part of salary. So these are called as components of the salary. Then allowances, taxable and exempt. So fully taxable, so partly taxable and fully exempt. These 3 types of allowances are there. So fully taxable, partially exempt and fully exempt. So fully taxable, so dearness allowance, city compensatory allowance, all these types of allowances are fully taxable. Means full tax is charged on the full amount. Then partially exempt, HRA, leave travel allowance, LTA, all these allowances are partially exempt. Means students are required to prepare working note for this, and according to the given percentage and limits in Income Tax Act, students are required to calculate that partially exempt allowances. Next is fully exempt. So foreign allowances for government employees abroad are fully exempt, means they are not required to pay tax on it. Next is perquisites. So perquisites are monetary and non-monetary benefits provided by the employer to the employee. For example, rent-free accommodation, furnished accommodation, unfurnished accommodation, use of company car. So all these examples are called as perquisites. So some perquisites are also taxable and some are exempt. So according to the rules of Income Tax Act, the perquisites rules change. Next is deduction from salary income. So standard deduction is always 50,000 as per academic financial year 2024 and 25. Professional tax, it is deductible if paid. And entertainment allowance for government employees. So these 3 exemptions are always there. For standard deduction 50,000, professional tax, and next is entertainment allowance for in case of government employees only. Tax treatment of retirement benefits. So gratuity, it is exempt up to the specified limit, and in case of provident fund, taxable depending upon the types, statutory, recognized and unrecognized. So statutory provident fund, recognized provident fund, unrecognized provident fund, in short it is called as SPF, RPF and UPF. all these three types are included in retirement benefit. Last is pension. So computed, partially exempt, and uncomputed, which is fully exempt for the employees. So some important points: salary includes advance salary and arrears of salary. So it is facility given by a company to the employees, so they can collect salary in advance, and if is there any arrears, so at that time also employees will get that arrears of salaries. Then next is voluntary retirement compensation may be exempted under section 10 subsection 10C in case of VRS, and deduction available under section 6A like ATC, ATD are separate from the salary deduction. After completion of gross salary, we can calculate deductions. Example salary income calculation. So first is gross salary, includes the basic salary, all the types of allowances, all the types of perquisites. After listing all these things, resulted into gross salary, means total of all basics, allowances and perquisites. Then standard deduction is always 50,000. Then less professional tax is paid by employer or employee, and whatever remaining amount is there, that amount is called as net salary income taxable. In conclusion, we can say that proper planning can reduce the taxable salary income. Different government schemes are there to invest money and to reduce the tax burden. Understanding exemptions and deduction is essential. So under from ATC to A to U, every deductions we require to understand. So it is possible to take exemption of salary. And last is salary income form a major part of individual taxation.